Welcome, listener. You're here because you've made a decision to take control of your financial future, to break free from the grind, the stress, and the uncertainty of living paycheck to paycheck. You're here because you want financial freedom, not just a vague dream, but a clear, achievable goal. This audiobook, Financial Freedom in 10 Years, Step-by-Step Guide, is your roadmap. I'm not here to promise you overnight riches or some get-rich-quick scheme. What I'm offering is a practical, no-nonsense path to building wealth, security, and independence over the next decade. Let's start with a simple truth. Financial freedom is not about having millions in the bank, though that's nice if you can get there. It's about having enough money to live life on your terms without fear of bills, without a boss dictating your time, and without the constant weight of financial stress. It's about choices. The choice to work because you want to, not because you have to. The choice to travel, to spend time with loved ones, or to pursue passions that light you up. And the good news, you don't need to be a financial genius or inherit a fortune to make this happen. You just need a plan, commitment, and the willingness to take action. I'm going to walk you through a step-by-step process to achieve financial freedom in 10 years. This isn't a one-size-fits-all formula, because your life, your goals, and your circumstances are unique. But the principles we'll cover are universal. They've worked for countless people, ordinary people, not billionaires, who started where you are now and built a life of freedom. You'll hear practical strategies, mindset shifts, and real-world examples to keep you motivated and on track. My job is to be your guide, your cheerleader, and sometimes your tough coach, because this journey isn't always easy, but it is absolutely worth it. Let's set the stage. Why 10 years? Because it's a realistic time frame. It's long enough to build something meaningful, whether that's paying off debt, growing investments, or creating multiple income streams, but short enough to keep you focused and motivated. 10 years from now, you could be living a life where money is no longer a source of worry. You could be free. But it starts with the decision you're making right now, to take this seriously, to act, and to stick with it. Before we dive into the steps, let's address the elephant in the room: doubt. You might be thinking, can I really do this? I don't earn enough. I'm too old, too young, too deep in debt. Or maybe you've tried budgeting or investing before and it didn't work out. I hear you, those doubts are normal. But let me tell you something. Financial freedom isn't reserved for the privileged few. It's for anyone willing to learn, adapt, and take consistent action. You don't need a perfect starting point. You just need to start. Here's what we're going to cover. We'll begin by defining what financial freedom means to you, because it's different for everyone. Then, we'll build a foundation, your mindset, your financial snapshot, and a clear plan to get from where you are to where you want to be. From there, we'll walk through practical steps: managing debt, building savings, increasing your income, investing wisely, and creating systems to make your money work for you. We'll talk about avoiding common pitfalls, staying motivated through setbacks, and scaling your wealth over time. By the end, you'll have a clear, actionable blueprint to follow for the next 10 years. Ready? Let's begin. Imagine waking up 10 years from today. Your alarm isn't screaming at you to rush to a job you tolerate. Instead, you wake up when your body's ready, maybe with sunlight streaming through your window. You check your bank account, not out of fear, but curiosity, and see enough to cover your expenses for months, maybe years, without lifting a finger. You spend your day doing what you love, whether that's working on a passion project, traveling, or simply relaxing with a coffee and a good book. This isn't a fantasy. It's what financial freedom can look like. But to get there, we need to start with a clear picture of what it means to you. Take a moment to think. What does financial freedom mean in your life? Is it paying off your mortgage so you own your home outright? Is it having enough savings to quit your job and start a business? Or maybe it's simpler. being able to cover your bills without stress, take a vacation without maxing out a credit card, or retire early to spend time with your family. Whatever it is, hold that vision in your mind. That's your why. It's the fuel that will keep you going when things get tough. Now, let's get practical. Financial freedom isn't just a feeling, it's a number. To achieve it, you need to know how much money you'll need to cover your expenses without relying on a paycheck. This is called your freedom number. Here's how to calculate it. Add up your monthly expenses: rent or mortgage, groceries, utilities, transportation, insurance, and anything else you spend on regularly. Don't forget to include occasional costs like car repairs or holiday gifts. Let's say your monthly expenses total $3,000. Multiply that by 12 to get your annual expenses, $36,000 in this case. Now, multiply that by 25. Why 25? It's based on the 4% rule, a widely accepted guideline in personal finance. It says you can safely withdraw 4% of your investments each year without running out of money. So, $36,000 divided by 0.04 gives you a freedom number of $900,000. That's the amount you'd need invested to live off the returns, assuming a 4% withdrawal rate. Does $900,000 sound like a lot? It might. But here's the thing. You don't need to have it all in cash, and you don't need to get there overnight. Over 10 years, with the right strategies, you can build toward that number through savings, investments, and income growth. If your expenses are lower, say $2,000 a month, your freedom number drops to $600,000. If you can reduce your expenses or create passive income streams, that number shrinks even further. The point is, financial freedom is achievable, but it starts with clarity. Let's take a moment to do a quick exercise. If you're in a place where you can pause, grab a notebook or open a note on your phone. Write down your monthly expenses. Be honest, include everything, even that daily coffee or streaming subscription. Then calculate your freedom number using the formula I just shared. If you can't do it now, make a mental note to do it later. This number isn't set in stone, it's a starting point. As you move through this journey, you'll find ways to lower your expenses, increase your income, and make that number more attainable. Now that you have a vision and a number, let's talk about the mindset you'll need to make this happen. Mindset is the foundation of financial freedom. Without the right perspective, even the best strategies will fall apart. You see, money is emotional. It's tied to fear, shame, hope, and dreams. Maybe you grew up in a household where money was tight and you've carried a scarcity mindset into adulthood. Maybe you've made financial mistakes, credit card debt, bad investments, and you feel like you're too far behind to catch up. Or maybe you're doing okay but feel stuck, like you're running on a hamster wheel, working hard, but not getting ahead. Here's the truth. Your past doesn't define your future. Financial freedom is about taking control of your present to create the life you want. That starts with believing it's possible. You don't need to be perfect. You don't need to know everything about investing or taxes right now. You just need to be willing to learn, act, and keep going, even when it's hard. Let me share a quick story, not a fictional tale, but a real example to illustrate this. I once met someone named Sarah, a single mom who worked as a teacher. She was drowning in student loans and credit card debt, earning a modest salary, and felt like financial freedom was a pipe dream. But Sarah decided to take control. She started small, tracking her expenses, cutting back on non-essentials, and putting $50 a month into a retirement account. Over time, she learned about side hustles, paid off her high-interest debt, and started investing. 10 years later, she wasn't a millionaire, but she had enough savings and investments to cover her expenses, quit her stressful job, and start a small tutoring business she loved. Sarah's story isn't unique. It's proof that small, consistent actions, paired with the right mindset, can transform your life. So how do you build that mindset? First, replace scarcity with abundance. Instead of thinking, I'll never have enough, tell yourself, I'm learning how to create wealth. Second, embrace mistakes as lessons. If you overspend or make a bad financial choice, don't beat yourself up. Analyze it, learn, and move on. Third, surround yourself with positivity. Listen to podcasts, read books, or connect with people who inspire you to think bigger about money. And finally, commit to action. Knowledge is useless without execution. Every step you take, no matter how small, moves you closer to your goal. Now, let's get to the first practical step. Understanding where you stand financially. This is your financial snapshot. A clear, honest look at your income, expenses, assets, and debts. Think of it like a doctor's checkup. You can't treat an illness without knowing what's wrong, and you can't build wealth without knowing where you're starting. Here's how to take your snapshot. Start with your income. Add up everything you earn, your salary, side hustles, bonuses, or any other sources. If your income varies, use an average based on the last 6 months. Next, list your expenses. Track every dollar you spend for at least a month. Use a budgeting app, a spreadsheet, or even a notebook. Be thorough. Include rent, groceries, subscriptions, eating out, everything. Then list your assets, things like savings accounts, retirement funds, or property you own. Finally, list your debts, credit cards, student loans, car loans, mortgages, and any money you owe. This exercise might feel uncomfortable, especially if you're in debt or your savings are low. That's okay. The goal isn't to judge yourself, it's to get clarity. Once you have your snapshot, you'll know exactly what you're working with. For example, let's say you earn $4,000 a month, spend $3,500, have $5,000 in savings, and owe $20,000 in credit card debt. Your snapshot shows you're living close to the edge, with high debt and minimal savings. That's valuable information. It tells you where to focus first. Speaking of focus, let's talk about debt, because for many people, it's the biggest obstacle to financial freedom. Not all debt is bad. Mortgages or student loans, for instance, can be investments in your future. But high-interest consumer debt, like credit cards or payday loans, is a wealth killer. The average credit card interest rate is around 20%. If you owe $10,000, you're paying $2,000 a year just in interest. That's money you could be saving or investing. Here's how to tackle debt. First, stop adding to it. Cut up your credit cards if you have to, or at least stop using them for non-essentials. Second, choose a repayment strategy. There are 2 popular methods, the debt snowball and the debt avalanche. The snowball method involves paying off your smallest debt first, then rolling that payment into the next smallest, and so on. It's motivating because you see quick wins. The avalanche method focuses on paying off the debt with the highest interest rate first, which saves you more money in the long run. Both work. Choose the one that keeps you motivated. Let's say you have 3 debts: a $2,000 credit card at 18%, a $5,000 car loan at 6%, and a $10,000 student loan at 4%. With the snowball method, you'd focus on the $2,000 credit card first, paying as much as you can while making minimum payments on the others. With the avalanche method, you'd still target the credit card because it has the highest interest rate. Either way, the key is to pay more than the minimum. Otherwise, you're just treading water. Here's a pro tip. Negotiate your debts. Call your creditors and ask for a lower interest rate or a payment plan. You'd be surprised how often they're willing to work with you, especially if you've been a good customer. If you're overwhelmed, consider consulting a non-profit credit counseling service. Just avoid for-profit debt settlement companies that charge high fees. While you're tackling debt, you need to build a safety net. This is your emergency fund, a stash of cash to cover unexpected expenses like car repairs or medical bills. Without it, One emergency can derail your progress. Aim for $1,000 to start, then build up to 3 to 6 months' worth of expenses. Keep this money in a high-yield savings account where it earns a little interest but is still accessible. If you're starting from zero, save $50 a month, $100, whatever you can. The key is consistency. Now let's talk about increasing your income, because cutting expenses and paying off debt will only get you so far. To accelerate your journey to financial freedom, you need to earn more. This doesn't mean you have to quit your job or become an entrepreneur, though those are options. It means finding ways to boost your cash flow, whether through your current job, a side hustle, or new skills. Start with your current job. Have you asked for a raise recently? If not, prepare a case for why you deserve one. Highlight your accomplishments, research market salaries for your role, and practice your pitch. If a raise isn't possible, look for opportunities to earn more within your company, overtime, bonuses, or a promotion. If that's not an option, consider switching jobs. The job market rewards movement. People who change jobs every few years often earn more than those who stay put. Beyond your job, explore side hustles. The possibilities are endless. Freelancing, tutoring, driving for a rideshare service, selling handmade goods, or even renting out a spare room. The key is to choose something that fits your skills and schedule. For example, if you're good at writing, try freelance copywriting. If you love pets, start a dog walking service. Even an extra $500 a month can make a huge difference. That's $6,000 a year, enough to pay down debt, boost your savings, or invest. Investing. That word might make you nervous, especially if you've never done it before. But investing is the engine that will drive you to financial freedom. It's how your money grows over time, thanks to the magic of compound interest. Let me explain how it works. If you invest $10,000 today at an average annual return of 7%, which is realistic for a diversified stock market portfolio, in 10 years, that $10,000 could grow to nearly $20,000 without you adding another dime. That's your money working for you, not the other way around. The simplest way to start investing is through low-cost diversified index funds or exchange-traded funds, ETFs. These are baskets of stocks that track the overall market, like the S&P 500. They're low risk compared to picking individual stocks, and they have low fees. You don't need to be a Wall Street expert to do this. Open a brokerage account or use a robo-advisor, which automates the process for you. Start small. Even $100 a month adds up over time. If you have a workplace retirement plan, like a 401k or 403b, take advantage of it, especially if your employer offers a match. That's free money. Contribute at least enough to get the full match, then increase your contributions as your income grows. If you're self-employed or don't have a workplace plan, open an IRA, individual retirement account. There are two types, traditional and Roth. A traditional IRA lets you deduct contributions from your taxes now, but you'll pay taxes when you withdraw the money. A Roth IRA uses after-tax dollars, but withdrawals in retirement are tax-free. Both are powerful tools for building wealth. Real estate is another way to invest, but it's not for everyone. Buying a rental property can generate passive income, but it requires upfront capital, maintenance, and dealing with tenants. If you're interested, start by educating yourself. Read books, listen to podcasts, or talk to experienced investors. If real estate feels out of reach, consider real estate investment trusts, RIIs, which let you invest in property without owning it directly. Now let's talk about protecting your wealth. As you build your financial foundation, you need to safeguard it. This means having the right insurance, health, auto, home, and if you have dependents, life insurance. It also means creating a will or trust to ensure your assets go where you want, if something happens to you. These steps might not sound exciting, but they're critical to securing your future. Another key to financial freedom is automating your finances. Set up automatic transfers to your savings, investments, and debt payments. This removes the temptation to spend money before you save it. Think of it like paying yourself first. If you wait to save what's left at the end of the month, there's often nothing left. Automation makes discipline effortless. As you move through these steps, managing debt, saving, earning more, investing, you'll hit roadblocks. Life happens. You might lose a job, face a medical emergency, or get discouraged when progress feels slow. That's why resilience is so important. When setbacks come, don't give up. Reassess, adjust, and keep going. Remember Sarah, the teacher who started with debt and a modest income? She didn't let setbacks stop her. She kept learning, tweaking her plan, and moving forward. You can do the same. Let's talk about scaling your wealth. Once you've paid off high-interest debt, built an emergency fund, and started investing, it's time to think bigger. This is where you shift from defense to offense. Look for ways to accelerate your income, maybe by starting a business, investing in your education, or negotiating a higher salary. Explore passive income streams like dividend-paying stocks, rental properties, or online businesses. The goal is to create multiple sources of income so you're not reliant on one. Frugality plays a role here too. Financial freedom doesn't mean depriving yourself, but it does mean being intentional with your spending. Ask yourself, does this purchase align with my goals? If eating out every week costs you $400 a month, that's $4,800 a year. Money that could be invested, earning returns for decades. Find a balance between enjoying life now and building for the future. As you approach the 10-year mark, your focus will shift to optimizing and maintaining your wealth. This might mean rebalancing your investment portfolio, exploring tax-efficient strategies, or planning for retirement. If you've followed the steps, you'll likely be at or near your freedom number. You might choose to keep working, start a passion project, or retire early. The point is, you'll have options. Let's revisit your why. That vision you had at the start, waking up without financial stress, living life on your terms, is within reach. It won't happen by accident, but with the steps we've covered, you have the tools to make it reality. Start today. Take your financial snapshot. Set up a small automatic savings transfer. Research a side hustle.